Hello.
At long last. Good morning, young men.
Morning.
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 Seems I had a challenge. I had a challenge with my sound. The volume was not working, but I think at long last we are here. This is a math session or mathematics session. We had already shared with my colleagues on some of the topics. I hope I'm clear from that end.
Yes.
Yes.
Sorry for the delay. So I had the thought of one of the topics that you had shared with the Mwalimu. I'd already displayed something on commercial arithmetic. I don't know whether we are all on that page. Do we do commercial arithmetic, or you have another suggestion?
We do commercial arithmetic.
Okay, so let's look at basically what I want us to go through is income taxation. Eh?
True.
All right.
Victor.
So when we are looking at income tax, the very basics that sorry. So this is on income tax. No, this is too big. Correct. So we are on income tax. Income tax or taxation. If you recall from what you did in class, because this is not something new, I'm just picking it up from where your teachers left. There are some of the definitions that you did before you looked at the topic. And there's some of the basic definitions. And number one you are to define what is taxable income. Maybe we can look at the definitions first before we look at the question. What is taxable income? And you agreed taxable income is simply the gross tax, not the gross income. Is simply the gross income. So an individual, if you get an employment, you'll be having some terms of engagement or employment, and one of them is what we call the basic salary. Once you get the basic salary, you will be getting what we call allowances. So if you take basic salary plus allowances, you arrive at your gross income. That is one way of looking at it. Number two, to arrive at the taxable income, you can also look at it this way. Gross income is equals to the basic salary plus allowances minus any tax exemption. Let me change this color for that part of caption. Minus what we call any money that is tax exempted, tax exemptions. For example, if you say your basic salary is maybe 200,000, then you are given house allowance. You are given maybe transport allowance. But at the end of the day, you are told this part of the salary will not be taxed. If some part of the salary is not taxed, we say it has been exempted from tax. And that's where the tax exemptions come from. Or that's where we capture the tax exemptions. Is that okay?
Yes.
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 So that's definition number two. Number one. Definition number two is the process of taxation now.
Yes.
Number two, the taxation process. Under the taxation process, because this question I think was in your end of the term exam, to tax money, you need to consider the taxation rates. When we look at the taxation rates, they are usually tabulated. For example, I may come up with a category here, and then the rates here. So if I say money from maybe 1 to 3,000 would be taxed at a rate of maybe 10%. Then I say monies from 3,000 and the 1 to 7,000 would be taxed at the rate of maybe 15%. Then I move on to maybe 7,000 and the 1 to maybe 14,000. There is no fixed way of putting the slabs, 20%. And now I say anything or any monies above 14,000 will be taxed at the rate of maybe 25%. So that now becomes the taxation rates. Remember, when we are looking at the taxation rates, we are taxing Kenya shillings, not Kenya pounds. I know there is that concept of Kenya pounds in our books, but it's not very relevant currently. So we simply deal with the taxation in terms of Kenya shillings. The rates are usually in percentages. Then the other bit that we said is very important, or we need to understand, is Kenyan taxation is progressive. Kenyan taxation is progressive. So progressive simply means if I'm earning like 20,000 and I want to tax using this table, I will not go direct to the 20,000. I'll move step by step. So I look at the tax that I'll pay for the first 3,000. Then I'll pay tax for the first 3,000. So if I add 20,000 to tax and I've taxed the first 3,000, it means I still have 17,000 that is not taxed. So progressively, I go to the next slab. This slab. So in that slab, how much money is in that bracket? But to get the amount of money in the bracket, we subtract vertically so that we don't lose any value. So I will subtract this way. So I'll take 7,000 minus 3,000. Take note that I did not say 3,001 to 7,000. I'm saying 7,000 minus 3,000. Otherwise, if I start from 3,001, I'm losing 1 shilling. That will not be taxed. So the next one now will be 4,000. That will be taxed at the rate of 15%. Then I'll get that tax. Because I'm earning 20,000, it's not fully taxed. Progressively, I go to the next category. The next category starts from 7,001 to 14,000. But remember, because it's progressive, I'll still do the same story. I'll take 14,000 minus 7,000, and that will give me another 7,000. That will be taxed at the rate of 20%. So when I take that through that, it will give me the tax for that category. Now, I've already taxed the first 3,000. I've taxed the next 4,000. I've taxed 7,000. How much money is yet to be taxed?
6,000.
Can you hear me? How much money is yet to be taxed?
6,000.
Yes. So what is above 14,000 is now the 6,000 that is remaining. That 6,000 will be taxed at the rate of 25%. And therefore, that way you are moving slab by slab or category by category. So I started by the first 3,000. I paid tax for that. I went to the next 4,000. I paid tax for that. I went for the next 7,000. I paid tax for the 7,000. And then the remaining 6,000, I also paid the tax for that. So if you do the total here will be 20,000 because I taxed 3, then 4, that makes 7. 7 plus that 7 down there makes 14. 14 plus 6 makes 20,000. So I've taxed my full 20,000, but progressively, step by step, moving every category of the taxation slabs. And that's how we do taxation. Any concern up to that part?
No.
No concern.
Thank you.
No.
Once we now complete that taxation, what we get is what we call the gross tax, number 3. Definition number 3, gross tax. So remember, we are the category here, and we add the tax here. So the money you got at this point, plus the money you got here, plus what you got here, plus what you got the last one. When you add all those monies, what you end up with is the gross tax. So that's this where now we record our gross tax. And therefore, gross tax is the total tax that you are supposed to pay. Gross tax is the total tax. However, in taxation, you discussed number 4, what we call tax relief. Tax relief. We said a relief is some money that is deducted from your gross tax. You are relieved some tax. For those guys I teach, remember we said tax is like a burden in quotes. You are being burdened to pay some money, to give the government some money out of what you are earning or from your earnings. And therefore, if you are supposed to pay a certain amount of money. If it looks big, the government considers giving the citizens reliefs. So if you are relieved, it means you pay less tax than the gross tax. Remember, you relieve the tax, not income. I've seen some students who take the gross income and then they remove relief from there. No, salary is not a burden. So you cannot relieve yourself salary, but we relieve tax. So the moment now, for example, let's say I have a tax relief of some money here. So let me say my relief is worked out here. Then I write it down here. I now subtract and get some money here. I'll give you a question, a worked out example. That is where we place our relief. And this leads us to the next definition, number 5, net tax. Net tax, which is our next definition. So we arrive at net tax when we get gross tax minus relief. Whatever we get here becomes our net tax. And this net tax is what now you are supposed to pay to the government. So if you remember well, we are definition number 5. Number 1 was taxable income, which is given by basic salary plus allowances. And in case there are tax exemptions, you subtract. Number 2, we looked at the taxation process. How do we tax that gross income? Number 3, once we do that, we arrive at the gross tax. But we don't pay the gross tax to the government, we pay the net tax. So we must always subtract relief from the gross tax to arrive at the net tax. Any question? This one? Somebody needs to mute. Clive, Maina, I think you need to mute. Yes. Thank you. Any concern up to this point? Maxwell, yes, I can see your hand is up, Maxwell. You can speak.
Sir, is it assured that in every taxation session that we come across, there's going to be a tax relief?
Okay, most of the times the tax relief will be there, but if the tax relief is not there, you simply work with the gross tax. But remember, we said every question must reflect reality. And the reality is every time you are paying tax, there is always some relief. But just in case the relief is not there, then you just pay the gross tax. The gross tax becomes your net tax. But the practical thing is always you'll get a relief. Another concern? Yes, Michael Kishuru. Maura. I can see Maura 4M. No, 3M, sorry. Your hand is up. I can't hear.
Definition of tax relief.
Definition of tax relief. This is the amount of money that is subtracted from the gross tax. What is relief? Relief is to lessen the burden of paying tax. I'm calling it a burden because once you are paying tax, you are giving your money to the government. So what is to be relieved? Just the way you talk of the word relief, if you're under pressure and you relieve yourself, you say, I feel relieved. So we are looking at this tax as kind of some pressure. So once we say you are relieved, some of the tax is reduced. And once it is reduced, you pay a lesser amount. And therefore, that amount of money that is removed from your gross tax is what we call the tax relief. I can see other hands here. Maybe, let me see. Who is this? Just ask. I can't see who it is. But I can see somebody raising their hand up.
Is income tax the same as gross tax?
Is income tax the same as gross tax? It will depend on the context of the question. But generally, income tax is the tax you pay on your income. It can be the gross tax, it can be the net tax, depending on the information given in the question. If there is relief, then net tax becomes the income tax. If there is no relief, gross tax becomes your income tax. Another question? Good. Let's proceed. Okay, I can see another hand raised. Yes.
What is back taxation?
What is?
Back taxation.
Say it again.
Back taxation.
Tax.
Back taxation.
Back.
Yes.
All right. What is back taxation? Somebody's asking what is back. Back, I think you're saying going backwards. Kurudi nyuma. Back taxation. Somebody's asking what is back taxation?
I looked at a question that
yes.
in a book. I don't remember the book. I think it's made familiar about calculating the back taxation. The question is also the tax that was given, and now you're supposed to find out the amount of money, the basic salary, or basically the income tax, and the money he was given, so that you can pay that salary. The tax, I mean.
Okay. Number one, we don't have back taxation in mathematics, because when you say back taxation, I don't know. I don't know how you can be back taxation. But what I'm assuming is, what you're asking is, if now you are given the net tax, how do you work out the gross income or the taxable income? So it's simply the process of now, instead of looking for the tax, you are looking for the income. You are going the reverse. So you are not taxing. When you say back taxation, is like you are talking of there is any taxation that you are doing. You are not doing any taxation. You are just now reversing the question. Instead of looking for the tax, you are looking for the income. I believe that is what you mean by back taxation, reversing the process, such that where you are supposed to look for net tax, now you are going back to look for the income. So you'll be reversing the process of taxation. So we'll get there. Another concern? Yes, I can see many hands. Just ask. Now I am not, I can't tell who is raising their hand.
The question is,
yes. Ask.
Is taxable income the same as gross income? Because
very
in
good.
One of the
very good, very good. You've already said it. It is true. It is true.
What about when they say that taxable income is equals to gross income minus taxable income?
Yes.
Is equals to gross income minus allowable deductions. What are those deductions?
Deductions?
Yes.
When we just, I'm trying to fix this thing. I'm trying to see, just a minute. Let me address it with a question. I'm looking for a question here. When you say allowable deductions, that simply means there are some monies that are not taxed. If you are enjoying some money that are free from tax, we call them allowable deductions.
Yes.
Yes.
Thank you.
All right. Another?
Excuse me, sir.
Yes, please.
Is there any difference between net tax and pay?
Net tax and the pay as you earn or pay as you eat? No, they're exactly the same. No difference.
Excuse me, sir.
I can see several charts here. Let me read the charts. No. There is that compulsory tax relief. No, tax relief. It's okay. It is not necessarily compulsory, but it will always be there. This net tax is the same as per year. True. That's true. I'm just reading your charts now. Can we define net tax as the amount gotten after subtracting tax relief? Yes, that is true. Relief from gross tax? Yes, true. Back taxes are taxes that are due. Yeah, we say that is just reversing the process. Is net tax the same as income tax? Yes, net tax is the same as income tax. All right, another question. What about the relief on insurance? What do we do? Insurance relief is also a relief. I said there could be several forms of relief, like what we call the personal relief, and there's also what we call tax relief. So, and then I mean insurance relief. This concept of insurance relief simply means you have a policy, insurance policy, where you are paying some premium to an insurance company. But since you are paying some money to the insurance company, the government decides to relieve you part of your tax based on the premiums that you pay. What is the premium pay? Premium pay is the amount of money you pay to an insurance company. Let's say I can see my friend Vomika Nagawo. Let's say you have a tax policy or a tax, you're paying tax, you are paying an insurance company 5,000 per month. That 5,000 per month is what we call premium. What is gross income? We said gross income is all the money that you are supposed to earn before taxation, and is given by gross salary plus allowances. How about housing and the thing? No, that one forget about. It's an odd thing that is out of version. Don't bother with that. First, what is nominal rent? Forget about nominal rent. It is outdated. Please pardon, where premium pay falls in taxation process. Premium is a deduction. Premium is a deduction. We have not reached that point. I'll address that in the next step. Another concern? So you subtract the insurance relief from the gross income? No. Insurance relief you subtract from the gross tax. What is net income? Net income is now the gross salary or the gross income minus all deductions. What is the 1056? This is just a figure that has been used by the government, that has been used by government as relief. So premiums do not lie in relief. No, premiums are deductions, as you are putting it. Premiums are not reliefs. Premiums are deductions. What is a premium? I said premium is the amount you are paying to an agency like the insurance. Another, I think now I've addressed most of those questions. We can proceed to the next step. Now, there's something I'm sharing. I don't know whether you can see it.
Yes.
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 Just read what I'm sharing.
Yes.
Yes.
Just read it.
Mathematics
from 3, term 2, lesson 4, topic commercial arithmetic, income tax.
Let's go step by step.
Income tax.
Let's go step by step.
Introduction.
Now, we are saying individuals pay part of their income to the government. The money that they pay is called income tax. There were people asking me what is income tax. So agawo, income tax is the money an individual pays to the government. The government uses the taxes they collect to provide public services, such as the free education you enjoy in Alliance High School, health, like as the free health you get when you go to hospital, defense, just the way the government is protecting you from external aggression, roads, just like the way you have very good tarmacked or graded roads going to your villages. That is how the government uses the money that it collects from the public. Now, taxation. The first thing that I put there is gross tax. Let me remove this thing here. Yes, the first thing that this thing is not going away. I just relocate it. Okay, because it's not moving. So we are looking at the first definition, taxable income or gross tax. How do we arrive at that now? We are saying this is the income on which the tax is levied. To obtain the taxable income, we add the basic salary and all the allowances together. Is this? So there you are. So that's how you arrive at taxable income. The allowances include things like house allowance, medical allowance, transport allowance. So there are several forms of allowances that you pay. Now let's look at this hypothetical example. Just a minute, there's something that is stressing me here and is refusing to go away. Okay, I don't know whether you can see. Is that thing blocking? Waiting for join our boss control screen, something.
No.
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 Why is it not going away?
It's not visible from our side, so you can just continue.
Oh, you can't see it, eh? Good. If you can't see it. Okay, read the
You
question.
cannot see. No.
Company employees' monthly earnings are as follows.
Basic salary,
Good. If you can see that,
72,500.
that's what I wanted to see. Very good. So look at this. There is a company employee who has the following. Basic salary, he pays 72,500. House allowance is 23,000. Transport allowance 7,100. Then we are told the employee is entitled to a relief of 1,200. Every month, the following deductions are made. So there is loan repayment, SACCO shares, and finally NHIF. So this is what I was calling deductions. So can you capture that question so that when we are moving together, you remember where we'll be getting these numbers from?
Yes.
Just capture the question first.
Yes.
Move on.
It's been captured.
Are you done? So that we proceed?
No.
Okay,
Yes.
just copy the question first.
Team screenshot.
Yeah, yeah.
So are we together now? We move on.
Done.
No.
A company employee has those whatever, then he has a leave of that. Every month is entitled to the following deductions. Calculate the employee's net income. Net income. So the first thing to calculate is the taxable income. So who can tell me what's the taxable income there?
102,600.
What did you get to arrive at that? You simply take
102,600.
I added the basic salary plus the two allowances, house allowance plus
We take the
transport
basic salary
allowance.
plus the house allowance.
Very good. That will give you the taxable income. Now you can see at this stage, we are not interested in either relief or deductions. Let me see where we are here. I'm not interested in either these numbers here. I'm not interested in the relief, neither am I interested in deductions. My concern is just basic salary plus allowances. Now, this is what I was saying. In case in this question, there were tax exemptions, would have applied it at this stage, would have said basic salary plus house allowance plus transport allowance minus any exemption, just in case there were exemptions. That is the point at which we deal with the exemptions. Or there's another question someone asked, what about allowable deductions? This is the same stage where we subtract allowable deductions. So those people asking questions, at what point do we bring tax exemptions, or at what point do we bring allowable deductions? And both of them are usually subtracted. Would have taken basic salary, house plus hours allowance plus transport allowance, minus exemptions, minus allowable deductions. So these two are usually subtracted, this one and that one. But they don't need both to be there. They can be in the question, they can be missing. You can have one, like that, to arrive at the taxable income. I can see a question. Somebody is asking, no, he's working out other things. I can see 50. I don't know what that means. Okay. So now we go to the next step. Since now we know how to work out the taxable income, we will proceed. Let me clear this. Okay, then we go to the next one. We are saying taxable income is equal to basic salary plus allowances. In our case, our basic salary was that, house allowance was that, transport was that, and therefore we now have our total, sorry, I'm still here. Let me annotate this. So this is what we are calling, this is now what we are calling I want a bigger pen. Getting here. It's the same. Just a minute, I see. Okay. So this is what we are calling the gross income. Those people are asking now. Anytime you are talking about gross income, Anytime we are talking about taxable income, anytime we are talking about total income, anytime we are talking about all those terms mean the same thing. Gross income, taxable income, total income. In this case will be this amount. And remember we said the other terms that we can add there. If there were exemptions, we would have subtracted. If there were allowable deductions, we should also have subtracted. I can see some questions. Why don't we subtract the deductions from the taxable income first? Very good, Christian. You cannot subtract deductions from the taxable income before you do taxation. Why? If you subtract the deductions first, you will have small taxable income and the government will get little tax from your money. So the idea is the government wants to tax when you have the highest value, the maximum money you have, so that it has bigger tax from your income. That's the reason we don't subtract deductions before taxation. Then I can see allowable deductions. Yeah, allowable deductions you subtract from the from that stage. Can exemptions be deducted from the net? No. Exemptions are exempted from taxation. That's why they are called exemptions. You don't tax them. So they are subtracted before taxation. Where do we subtract deductions from? We are going there, Malik. We'll get there soon. Any other concern? You can text in case you are still lost. I'm assuming we are together up to that point. So let's proceed to the next step. Now we know how to arrive at the taxable income. We proceed. Now, taxation rates. Now let's tax. Tax rates are fixed by the government. The tax income is divided into different categories called slabs, as presented in this table. I think I'd already mentioned that. The tax rates varies from slab to slab. The higher the taxable income, the higher the tax one pays. And this is the question somebody was asking me. Whoever was asking me, why don't we remove the tax first? When you remove, you will have little money to tax. And the idea, as I told you, is to tax the highest value possible. So you don't, the higher the taxable income, the higher the tax one pays. And the objective of the government is to get the highest tax possible from your money. And that's the reason we don't subtract deductions before taxation. I can see somebody asking, what's an example of an allowable deduction? An allowable deduction is like an exemption, tax exemption. You are told you are supposed to pay this, but this part of the money is not taxed. That money that is not taxed, all of it, we give it the name allowable deduction. There is no particular item called allowable deduction. It's just the money that is not taxed. Okay, next. Let me remove this. Next, we are looking now taxation of that money using this kind of a table. So we are given a taxation table that says from 1 shillings to 19,600 is taxed at that rate. Can you tax the money now that you got? Do that taxation process yourself now. Michael Maura, let's tax that money now using the amount that we got up here. This amount here. Where was the amount? This is the amount. This 102,600 is the taxable income. Can you tax it here now? Tax it using that table so that we arrive at the gross tax. Just 2 minutes because it's not a long process. Somebody is asking, where do we add exemptions? We don't add exemptions. We said you subtract from the gross income. Is monthly premium an exemption? No, it's not an exemption. We are added there. I'll show you where to place it. Are there examples of exemptions? Yes, there are many. You'll hear people saying, this person does not pay tax for this, especially those people who are challenged. People who are challenged, they don't pay tax on some items, so they are exempted. So there are some items that the government will exempt from taxation.
Excuse me, sir.
Yes.
What if the challenged person has or makes enough income?
Yeah, they make enough income, but as a way of, I call it an affirmative action, they are given that advantage because they're expected to be spending more money because of their challenge. Suppose somebody is physically challenged, you know, their transport is different from those people who are normal. So they're expected to be spending more money to take care of their challenge. And that's why they're exempted from paying some taxes. Are there examples? Oh yeah, I think I responded to that. I'm just seeing a message. Gross tax. I can see somebody has already worked out the gross tax. K3, good. I've seen your answer. Another person, send your answer if you have gotten it. I've seen one from K3. You can write your class, Keith. Another person called Justin Mutua has sent his answer. I think Justin Mutua is from the famous 3K. Another person, Ongwai Valentino has sent his answer. Kimani, I've seen your answer. I'm not saying what the answer is because I can see they are different. Manyange has sent his answer. Ndubi has sent the answer. Abdallah Muvuri has sent the answer. Oliver Muraguri 3R has sent the answer. Most of the answers look familiar, similar, except, okay, you will see where you went wrong. Ken, I can see your answer. Washira, I can see your answer. Muturi, Eugene. Can you write your class after your answer? There are classes, maybe, I don't know whether they are here. 3A. 3A, I can see your answer. Singilai, I can see your answer. Abdul, I've seen your answer. Jeremy Kibrure, 3Q, I've seen your answer. These answers are not the same at all. Vomika, I've seen your answer. Caleb, 3A, I've seen your answer. Ian, John, 3R, I've seen your answer. Now, can I say which one is right and which one is wrong? I know you will stop sending when I say that. You will stop sending. You will mark for yourself. Mark, I can see your answer. Jeff, your answer is there. Jackton, Obama, your answer is there. But these answers are not, they are varying very much. Very much. Okay. So let's see what the correct answer is. So this is the table given. So your work was simply to come here and create a column for that. What is happening again? And so I'm saying your work was just to come here and create the column for tax. So the first 19,600 is tax at the rate of 10%. You write the tax there. You come to the next one. And we said, be very keen when you are subtracting. You subtract this way so that you don't lose 1 shilling. So how much money is between 39,200 and 19,600?
19,600.
It's another 19,600. Eh?
Yes.
So you tax. So you go until your last value, which is over this amount, and you write the tax there. Then from there, you do the totals, and that will be your gross tax. So let's see what the answer is. This is the answer for those who did it. How many got it right? Mark for yourself.
Me.
No. There's a guy who is displaying himself here, and I know he got it wrong. He got 3760.
Yes.
Yes, which was wrong.
Yes,
Look at the correct
yes.
answer.
Mr. Weaver.
Yeah? Valentino, you got it right. Brian Kamau, you got it right. Who is this other person? I'm just playing back. Felix, you got it right. This guy got it wrong. I will not say the name.
Say.
Just say.
Yeah, the wrongs are many. 3R, another one, 3R got it wrong. 3A got it wrong. You know, where are we now? I'm just playing back.
Rather
Brian,
3R.
Kamau, you got it right, Brian. I'm just playing back. Who is this? Andrew, you got it right. Is this guy from 3K got it wrong? There's this guy from 3Q got it. You know, it's just a mixture. Some got it right, others got it wrong. So now, check which slab you got it wrong. The first slab was 1,960. The next slab was to give you a tax of 2,940. The third slab was to give you, and as I go through the slabs, what I think you need to be keen on is this. Let me annotate a bit. We look at it. Okay, so when you annotate, I'm saying the most important thing to check here is, did you get this figure right? Was the tax right? Because it's now the tax. Did you get this figure right? Was this the tax? Did you get this figure right? Most likely, if you have a number here which is varying in these slabs, these ones, that is where you went wrong. And this is what we meant by tax is progressive. Progressive. Progressive means, you know, you tax step by step. You don't just do it at a go. You don't get all the money and place it in one slab and you tax it. All your money has to go through the slabs where it can be, where the value reaches. So the remaining amount that was not taxed was this figure, which gave you this. And then you have your gross tax. This is what we meant by, I think that this was our definition number 3, if I'm right. Gross tax. Now, there's a guy who was asking about reverse taxation or reverse process. It is now, if I give you the gross tax, how do I go back to get the 102,600? That's what you meant by reverse taxation. But you see, you're not taxing. You're only reversing the question. I give you the tax, you give me the taxable income. I give you the taxable income, you give me the tax. One is just the reverse of the other. I think that's where you are talking about reverse taxation. Now we can now, oh, this somebody else is okay. Please kindly repeat the procedure. Somebody says we look at the procedure again. What I'll do, I'll simply clear this. We can take roll call, by the way. Let's take roll call. Take roll call, take roll call. Some classes are slow. Some classes are slow. Where is D? D, you are not taking roll call. C, D and C. D and C. 3C, 3D. Let's fast finish. Let's clear this. We'll continue with the question. Let's first finish this. A, you are leading. A, you are leading, taking roll call with the M, tying with the M. Now I think B is joining there. Where is G? Members of G and the D and the C. Take roll call. Members of C, you're not taking roll call. Your graph is stationary, becoming a constant. Oh, members of C, you are still below. Increase the, just finish with the roll call, then we move on.
I think it's okay, sir. We can continue.
Okay, the rest we continue as we work out. So somebody was asking the process, and I was saying, we can look at the process again where we are saying, you'll be given the table like what is displayed here. And this table is dictated or is produced by the government. So the government will dictate the taxation rates. So for example, we are assuming this is a period where the government is saying those who are earning between one shilling and 19,600, that money will be taxed at the rate of 10%. Those whose their salaries go to 39,200, they will be taxed at two levels, the first level and the second level, all the way to the last one. So this table is provided by the government in the proper taxation. However, when now we start taxing, you look at the gross taxable income and you ask yourself, if in this case, for example, in this case, our gross taxable income is 102, how far will it go in this taxation? And that's why we came here and said, the money that we have here will be taxed all the way to the last slab, because I have 102,600. So it will be taxed at this slab. There's still some more money to go to this slab, another money to go to this slab, another money. But because our table goes up to 78,400, there is some excess. There is some excess that will be placed in that category. And the tax at the rate of, you remember these are percentages, by the way, although it is shown up there. These are percentages. So you just take that value times 10%. The next one times 15%. And what you'll be obtaining when you do that is what we call the tax. Once we did that in our calculation, this is what we got. We realized the first step is giving us a tax of that amount. The next one up to the last one. And when we arrive at the last one, we say that is our gross tax. So I can see, can you give another example? Yes, we are headed there. We have not even finished this question. Yes. Another question? No, I think that is from another source. So that's how you arrive at the gross tax. Now we proceed with the next definition. We said relief, tax relief. Those who are asking about tax reliefs, here we are. This is a reduction in the amount of tax that a person has to pay. Some of the reliefs include personal relief and the insurance relief. I remember somebody was asking me, where do we place the insurance relief? This is where we place the insurance relief. In this example, the employee is entitled to a tax relief of 1,200. So if you remember your question, we had said there will be a tax relief of 1,200. So for those who are asking questions, let me do some annotation here. Those who are asking some questions, if there was now insurance relief, if there was insurance relief, I would have placed it here. Let's say insurance relief of 800. It should have come here. So the question is, what would be my total reliefs? My total reliefs would have been 2,000. But in this question, our relief is only 1,200. But the point is, you can have more than one relief. Personal relief, insurance relief, and many, many other reliefs. But the relief is placed at this level after you do taxation. I've already illustrated by saying, suppose there was an insurance relief of 800, would have placed it here, and our total reliefs would have increased from 1,200 to 2,000. Is it clear now with the reliefs?
Yes.
Okay, good. So we proceed after relief. We proceed and now say, what is net tax? Net tax is gross tax minus total reliefs. In this case now, these are the questions you're asking me. I had so many questions. Is the tax relief the net income? Is the net blah, blah, all those stories you're asking me. Here they are now. We are saying anytime just a minute. Yeah. Okay, we are here saying, let me annotate. I want to annotate, but it's not behaving. Yes, we are saying when you are given, when you are looking for net tax, I think this was a definition number either 5 or 6, I can't remember in our definitions. You'll go to your gross tax. And our gross tax for this case was 20,980 minus any relief. What you end up is the net tax. So the net tax in this question is 19,780. I had somebody asking, is this what we call pay as you earn? Yes, that is pay as you eat. So this guy was being paid 100, I think 102, 600. So he's supposed to give the government tax of 19,780 as the net. Now, remember the concept I was telling you about reliefs. If this guy was having the other relief of 800, would now be subtracting 2,000, and his net pay, his net tax, tax would have been lesser. So the more the reliefs, the less the tax. You know, increase the number of reliefs, you pay less tax. If there are no reliefs, you pay more tax. Hence, the name relief is to reduce the burden of paying tax. Let me not call it the burden. It's just to reduce your responsibility of paying tax. Is that part now taken care of reliefs?
Yes.
Yes. Net tax. Case stream, net tax. No, that case stream was not correct. Where does insurance relief come in? Very good. Somebody is asking, where does insurance relief come in? It is here. I'm saying, plus, if there was another one like insurance relief of 800 shillings, would have used it here. This is where we use all reliefs, whether in insurance, whether it's personal, whether it's family, whatever insurance relief, you subtract it from the gross tax. That's the question I saw. Another question, is insurance relief for premium? I don't understand that English, but I'm assuming you're asking whether insurance relief is paid as for the premiums paid. Yes and no, it depends. Sometimes you'll be told, somebody is giving the government 5,000 shillings. No, insurance company. You are paying insurance company a premium of 5,000 every month. Then you are relieved depending on the premiums. So you are told your insurance relief is 10% of the insurance premium. So if you are paying insurance premium of 5%, you now work of 5,000, you work out 10% of 5,000, and I think this will be 500. So now your insurance relief becomes 500 because it is pegged on the insurance premium. You are paying premiums of 5,000 every month to an insurance company, but you are told your insurance relief is 10% of your premiums. So you come and work out 10% of 5,000, you get 500. So that 500 now becomes insurance relief. Yes.
You have subtracted the 2,000 from the net tax instead of the gross tax.
No, I'm good. See here. No. I'm saying, suppose there was another relief of 800. You take 1,200 plus 800 to arrive at your total relief. Then your total relief is minus 2,000.
So 2,000, ungepata 18,980.
Oh, the amount I'm getting is 18. It should be 18, eh? Like that.
Yes.
Oh,
yes.
Correct. Let me see some questions I'm seeing here. 18. Oh, yeah. You will subtract insurance relief from the premium you are to pay. No. Insurance relief is a relief. You subtract from the gross tax. Reliefs are treated in an equal way. Somebody is asking me whether I'll subtract relief from premium. No. Premium is not your money. Premium is money that goes to the insurance company. So the insurance company is waiting for his 5,000. So insurance company is expecting their 5,000, but the government will relieve you 500. So what you are relieved is the gross tax, is not the premiums. Premiums remain intact, 5,000. Okay, so we move to the next step. If there are no questions, I can see here some questions. Let me see. So insurance relief is a deduction. Yes, is it a deduction from the gross tax? Yes, it is a deduction from the gross tax. Yeah, I can see, Kevin, it's correct. You are right. Insurance relief is a deduction from your gross tax to arrive at the net tax. All right. Let me clear this. We move to the next level. So the next part says other deductions. And remember, I've used this word strategically. I've said other deductions. Why am I saying other deductions? Because we already have the first deduction. The first deduction from your salary is always net tax. Net tax is always the first deduction. So we have worked out the net tax, which becomes our first deduction. But now we are saying there are other things that can be subtracted from your salary. And this guy has a deduction called loan. He's paying a loan of 34,100 every month. He's paying for SACCO. He's paying 9,600. He has shares that he pays every month. He has an NHIF that he's paying. So which means these other deductions add up to 46,100. Get it very clear. The word is other deductions. I said I deliberately chose the word other because I already have a deduction called tax. The net tax is a deduction, but there are others that you can subtract from your salary, which is, it can be NHIF, can be SACCO, can be loan, can be insurance. If there was insurance, by the way, the insurance premium is a deduction. Insurance premium is a deduction. I'd picked a figure of 5,000. If this was to be there, now the deduction would have been 51,100. So insurance premium is a deduction. That 5,000 will be subtracted from your salary. I had taken a figure of 5,000 to be a premium. So you add it here as part of other deductions. So in this case, when you take the tax, the net tax plus other deductions, you arrive at gross deductions. Like I can see a question here. Let me see what he's saying. It is asking, do you subtract monthly premium from your net income? No, you don't subtract from your net income, but we are going there. You will see where we are subtracting from soon. Yes, okay. I think there are no other questions that I'm seeing here. We clear this and we proceed. So once we have the other deductions, now we can come and work out total deductions. How do we arrive at total deductions? Now you get your net tax plus other deductions. In our case here, let me annotate this. In our case here, we had net tax was 19,780. We have realized there are other deduction of this. So in total, these now are the total deductions. Remember, I've said if there was an insurance relief, this would have gone 5,000 higher. If there were other premiums, the tax would have been less. If there was relief, tax relief, introduce tax relief, the tax goes down. Introduce the premium, the deductions goes up. I can see some questions. Let me see what the question is. Somebody is asking, but teacher, there was a relief of 500 from the, should we not consider it when calculating the deductions? But you see now, we are working a different question from what I gave there. I'm trying to include other things that were not captured in this question. I said, if there was a premium of 5,000, now our deduction would be what we have here, which is 46. Sorry, let me minimize this. Oh, what is happening? Yeah, would have been what we have here is 46,100 plus 5,000, if that was the question. But remember, this question is different. So our total deduction would have been 51,100. But because this premium is something I introduced along the way, it is not part of what we are working out. Just the way I said, if this guy was paying a premium of 5,000 and he was to get a relief, which is 10% of the premium, he would be getting 500 as tax relief. But you see, because that one is not part of our question, we are not using it. Yes, where is the 5,000 coming from? No, I said the 5,000 was just an hypothetical figure that I picked along the way to show the concept of premiums and the insurance reliefs. Sajona, could you repeat the concept of reverse taxation before the lesson ends? But we have not finished the question. Let's first finish, then we reverse. We think of reversing. Okay. All right. So with that, I clear this. We proceed. Now, next. Net income. You're asking me, what is this net income? Net income is now the money that you get, and the money that you get is what we call the net income. In this case, or in our example, you can now see to get net income, which is also called net pay, or even net salary. It will have all these names. Is equals to the taxable income that you are to get minus all the deductions. So the question is, how much was I to get at the beginning? I was supposed to get 102,600 minus the total deductions, which got 65,880. So this is what you find in your account. If you are employed to earn 102,000, when we subtract the deductions, you only take home that 6,720. And that question cuts across everything about taxation. The only bit that I did not capture is the one on premiums. Insurance and the premiums, which as I explained as we walked along the way. There is nothing that question has left out. All the things that can be in taxation, I've mentioned them, right from exemptions, allowable deductions, premiums, insurance relief, up to the last stage. But remember, you will answer the question depending on how far you are supposed to go. I'm not saying when you get a question, it must come up to net salary. No, you will always stop at the point where the question requires you to stop. But I've gone through the full process from beginning to the end. I can see some questions coming. What about the concept of Kenyan pound? Forget about that. It is outdated. The net income is not the same as taxable income. True, net income is not the same as taxable income. Taxable income is the money you are to get. Like taxable income here is 102. Net income is 36. So you can see definitely they are not the same. Could you please pose a question on premiums and reliefs on premiums? Okay. We can go back there. Sorry, I have some cough. Let me go back there where you're asking those questions. I think next time I will include them in the working. Let me go there where the premium started. Okay. Now, let's start here. We agreed this is the, oh, sorry. What have I done now? I have not annotated. Just a minute. I want to capture those things you're asking. Now we said just a minute, trying to get something here. Oh yeah, it's there. I'm saying, I'm trying to tell you that that is the taxable, that is the taxable income. That is what you're asking me. But when you arrive at this taxable income, you proceed and do the taxation as illustrated here. This is how we worked out the taxation. We went to the taxation slabs. We arrived at that gross tax up to that point. But the idea of reliefs, this way it comes in. I was saying, in this question, let's assume, this thing is not behaving well. I don't know why. Okay, I'm saying, suppose in this question, we had it's not behaving. Just in, I hope you'll see what I'll be writing, even if there are small writings. Just in this question, where we have personal relief and insurance relief, I said, suppose this guy had an insurance policy. Can you see my small handwriting there? Yes. And in that policy, this guy is paying 5,000 to the insurance every month. Definitely, this insurance is a deduction. It will be subtracted from his salary because the 5,000 goes to the insurance company. And this is what we call the premium, insurance premium. the amount of money you are paying every month. However, once you obtain an insurance premium, you are given insurance relief. Then I gave an example. I said, for you to be relieved, you are relieved depending on the amount of premiums you pay using a certain rate. I chose a 10%. Suppose you are relieved according to the rate of 10% of your premiums, which gave us a figure like 500. So there are two numbers here. There is 5,000 and there is 500. The 5,000 becomes a deduction. The 500 becomes a relief. So when I will be calculating my reliefs, I will talk of personal relief plus insurance relief to get my total reliefs. But when I go to deductions, I'll take all deductions plus 5,000. So let's see where it lies in the working. We proceed. So now carry that 500 and the 5,000 in your head and see where we are placing them. Now we come to this question. In this question, net tax will be given by net tax will be given by the gross tax, which you are supposed to pay this, minus personal relief plus insurance relief, the very 500 that we have introduced, which means if there was insurance relief, what would be our net tax, which is our per year? Work it out and tell me the value.
19 to 80.
19?
280.
Yes. So that is now the money that will be paying to the government. 1,900,280. That is, no? 19,280. That's what goes to the government. If there was an insurance relief. So the question is, where is the 5,000? We have not used it. Let's go and see where we place the 5,000. We proceed with our working. We come here. Now we have our pay as you earn. Other deductions. Now, we have now agreed, if this was the arrangement, then we are going to add another deduction here called premium. 5,000. So this figure now changes to 51,100 because there is a premium. So all the premium goes to deduction, but the insurance only remains as an insurance relief. So do not look at 5,000 and 500 and think like we are subtracting 4,500. No, we are subtracting the whole 5,000 because these are two different entities. One is government, the other one insurance company. The insurance company is expecting to get 5,000, but the government relieves you 500. So it's the government suffering, the government losing tax, not the insurance company losing the money or the premiums. Let me see whether we proceeded from there. From there, what did we say? Total deductions, now they come there. Very good. I think I've captured that. Let me see. I can see some charts. What about the rates, the premium per annum, and you total calculate the net tax per month? You know that one, you just convert the tables. Where you have given the money per year, you multiply by 12. If you calculate the tax per year, you divide by 12 to get per month, because per year is per month, not per year. We don't have per year. Pay as you earn is always calculated on a monthly basis. What if the company is paying for his insurance policy? What do you mean by that? Let me go up and see the question. What about when working with annual rate? I think I've addressed that. Please help us do what is the company paying? Huh? What if the company is paying? You know, even if the company paying, you know that money is your money. When a company pays for your insurance policy, you know that money should have been paid to you directly. So it is still your income. So it's a deduction. It is the company paying, which means the company pays you less. So the story remains the same. What if the employee is paying rent? There is nothing like that. Rent, you don't pay rent. You pay rent to who now? When you say an employee is paying rent, it means he has a house allowance. So it is him to spend his money the way he wants. But I know where you are coming from. You are coming from the issues of nominal rent and the rest. That I said is outdated and is not applicable anymore. So basically the premium figure is used twice as relief and as premium. True. The premium figure is used twice, but remember, how is it used? Part of it is, I mean, a percentage of it is worked out as relief, and the other one is worked out as fully as a deduction. So you are right. Somebody's mic is not muted, please. What if the employee is being paid weekly? Will the pay still be calculated monthly? Remember, not everybody pays tax in Kenya, and that's why we are calling it income tax. Income comes from the word income. And in Kenya, incomes are paid per month, not per week. If you are paid per week, that is Kibarua, and the guys of Kibarua don't pay income tax. In fact, their salary, most of them, their salary does not qualify to get in the bracket of taxation. Then the minimum amount that you can be taxed in Kenya, I think, is around 30, either 12 or 13,000. There is also a bare minimum. Not everybody pays income tax. Some money is too little to pay tax, to pay income tax, sorry. So kindly confirm if the Kenyan pound is still used. No, forget about it. It's outdated. What is Kenyan pound? It's a colonial thing. How can you say the exchange rate for dollar is 20 shillings when now we are even going to 130 something? It's something that we have been using, but is outdated. It has been overtaken by time. There is nothing Kenyan pound. It is just a word we have been using, but seems like it is losing its taste. So that should not bother you. Will it come in the exam again? No, it will not come in the exam again. But there are questions in KMF with the Kenyan pound. True, but look at the years. When were they tested? They were tested before 2005, I guess. That's the time when we were still paying loyalty to our colonizers. We are no longer interested in the Kenyan pound. We are interested in Kenyan shillings. So if you look at KMF for the last 5 or 10 years, you will not see anything about Kenyan pound. Another concern. What do they consider before they allocate allowances to public servants? Those are just terms of engagement. When you're employed, different companies, government agencies, public service, will pay allowances. I can hear somebody speaking. So allowances vary depending on the jobs you do. You not tell me a security officer will be paid the same allowance as a teacher in terms of risk allowance. Who is suffering more risk is a security officer. He'll be having higher allowance. Transport allowance the same. People who travel outside the country, they cannot get the same allowance as somebody who is a local person. Do NGOs pay this income tax? Yes, they are Kenyan employees. Although there are some categories of people who are exempted from tax. Another question? I think we are finishing. But what if it comes again in our examination as it did in the end of term exam? Solomon, that one will take care of it. Don't worry. Don't worry. But I'm sure you still did it because you already told a pound is 20. But forget about it. You are not likely to see it in any. Is no longer applicable in the current. What used to happen before, people used to be given what I would call free houses. For example, you are working with a company like Kenya Breweries, and they give you a house, 4-bedroom house for free. When you are given a house for free, that does not mean the house is free. The company should have been paying you a higher salary, but it pays you less salary because it is giving you a house. What does that mean? The government wants to tax you like the house, like you are being paid a house allowance. So the government was assuming 15% of your basic salary is the money that the government should have given you as house allowance. Excuse me, sir, I have a question. Is the president, that one has disappeared before I finish reading. Let me go back a bit. Can further be left for further revision? Yes, you can use KMF. Is the president taxed? Definitely. He's a public servant. He pays tax. Can the question be left for further? Yeah, I'm saying you will get questions. You can use KMF, I think, and although I can still give you more. Excuse me, I have a question. Where is the question? Where this? I think I've lost the chat. Let me open it. Okay, it's here. Don't forget to repeat the concept of reverse. Yes, reverse. Okay, it may not be possible to do the reverse up to the end. We have only 5 minutes. What about nominal rent? How do we go about it? I said this concept of nominal rent used to work this way. Let me write here. I don't know whether I can annotate so that I clear these ones and for all. Seems to be coming in every other minute. Okay, let me annotate this here. We are saying to arrive at taxable income, there is something which used to happen like this before, but is outdated. You take your basic salary plus 15% of your basic salary minus nominal rent. Let me take an example where I said if you're employed by Kenya Breweries, Kenya Breweries is the company that I think makes bread. They'll give you basic salary. Let's say 300,000 per month. But they also give you a free house. Free house is not free. I'm putting brackets. But because the government wants to tax the maximum money from your salary, the government assumes if you are being paid 300,000, if you are given a house allowance, you'll be having more money than 300,000. The reason you're earning only 300,000 is because you are given a free house. So the government was assuming 15% of your basic salary should be your house allowance. So they take 15% of your basic salary, they add here. So that maybe this takes you to 320,000 or 50,000 as your taxable income. So that concept of free is what we are taxing by the 15% of the basic salary. Because being given 300,000 means you deserved more salary than 300,000. But because you are given a free house, you are given less money. But since the government wants you to have the highest figure for taxation, they take 15% of your basic salary, they add to your basic salary to arrive at your taxable income. Now, assuming they are taxing this thing we are calling free house. Then the nominal rent is when you are given a free house, means, the company can ask you to pay something like 2,000, which is not equivalent to the value of this house in the market. If the house is like 50,000 per month and you are paying 2,000, this 2,000 was taken as nominal rent, where nominal rent is like money you are paying for things like services, maintaining cleanliness, garbage collection, and the like. So that subtraction is nominal rent. And because this is money you are being subtracted or is being paid to the company to maintain the estate, that is not taxed. But I'm still insisting this is an outdated concept. Forget about it. You will not come across it anywhere in the near future. Even when you start working, you don't expect free houses. Nowadays, we have house allowances for everyone. Do you mind sending more questions on radiant measure? That radiant measure, we can look at it maybe in another session. What this more or less advantageous? Now I don't understand the question. Can we get recording of these sessions? I think that it's be recorded as we speak. How do carry tax government officials like the president, the deputy president? Definitely, guys. They are subjected to the same scale. They are not taxed differently. All civil servants are subject to the same taxation regime, because I said a taxation process is something that is decided by the government. So if the taxation table that we have cuts across, but I may not want to go to that direction. I don't know whether, the president could be having so much money when it comes to the lower rank, it picks a big chunk of the salary. So I may not be very sure what happens there. I mean nominal rent. I have addressed that. Is this tax concept practical? Definitely. Why is not practical? Google in the internet, you see very many pay slips. Every pay slip has a tax. People pay tax every month, including myself. I'll come with my pay slip next month when you open. Come look for mine. Is the tax concept? Yeah, it's practical. Thank you, sir. Thank you. I think that comes to the end of our session unless there is a question. Mr. Ombiro, are you in this forum?
I mean, sir, I'm following very well. Thank you very much.
Yes.
Yeah, very, very excellent lesson.
Okay, sir. All right. Anybody with a question? Not now about taxation. Any other concern outside this? Any comment, any concern, any complaint?
Yes, sir.
A computer technician who makes software and sells them to people is not under any, no, they pay tax. Are you promised to pay? Yeah, I promise to give you my pay slip when you come. Mwenda, come to class. I come with my pay slip. It's online. I just open it online.
Victor is also has a question. Victor Mula, go ahead with the question.
Yes, I wanted to ask about this concept of interest in money, semi-annually.
Yeah. Can we look at that as a separate thing, because it's very different from this? But the basic thing is, if you see, let me just write it here, just to answer to your, to clear your concern. Where is this? What you're asking is when money is B, amount is equals to principal plus 1 plus R over 100 raised to power n. If money is compounded semi-annually, I think I saw something like that, and I said we may not handle it now. You just say amount is equals to principal plus 1 over R over, this now becomes 200 raised to power semi-annually. Per year, you'll do it twice, so this becomes 2n. So if you look at it, what I'm doing, I'm just dividing the rate by 2, and I multiply the number of compounding periods by 2. If it's quarterly, the formula now will still be the same, but quarterly amount will be P into 1 plus R over 400 raised to power 4n. That's how you work out that formula.
Yes,
okay. Thank you so much for listening. Hope to see you next week, and remember, as you come in, we must finish the syllabus by the end of the term, so come prepared to work extra hard. Remember all Form 3K members to come with the geometrical set for the topic that we skipped. Very good. Somebody is reminding 3K members, they have not done I think this is circles and the chords. So come with the geometrical set. One of you is reminding you that. Okay, thank you. Have a good day.
Thank you.
Thank you, Mwalimu. We appreciate.
Thank you, Mwalimu.
All right.
Thank you, Mwalimu.
Karibuni sana.
Abel, when are we opening?
Income is a word that comes from income.
And